Guys, in September, my portfolio fell faster than the autumn leaves on the trees, which is something that is very bittersweet as a dividend investor. On one hand, it stings like a you-know-what to see our positions just cratering in value, but on the other hand, it's creating a really great opportunity to pick up some shares of our favorite dividend stocks at a deep discount, which is exactly what I've been doing, but we'll get to that later on in the video. First, I want to show you just how substantial the drop was in my portfolio these last 30 days. Now, what we're looking at here is some portfolio performance data that I pulled from Charles Schwab, which is the brokerage that I use to invest. And as you can see in the selected period here, I'm down 7.69%, which means just in the last month, in the last 30 days, guys, I dropped basically 7.7%, a very substantial drop, which puts me at a year-to-date loss of 10.67%, with most of those losses coming just in the month of September. Now, while the portfolio is down, guys, we are still outperforming the S&P 500 by quite a bit actually in 2022. As you can see, the S&P is down almost 23% this year compared to our loss of 10.67%. So we're basically doubling the returns of the S&P so far this year. And if we zoom out over a longer period of time and take a look at the 3-year performance, I'm still outperforming the S&P. So since 2019, which is when I really started getting into this investing stuff and taking it seriously, my portfolio is beating the S&P by about 0.7% every single year. Now, taking a look at my dividend portfolio tracking spreadsheet here on Google Sheets, which you guys can grab for free, there's a link to it in the description. This is version 5.0, which I have yet to release. I'll be putting this out in the next few weeks, probably sometime towards the middle to end of October, so stay tuned for that. I'll be putting out more details on that shortly. But taking a look at my annual dividend income, as you guys can see right here, my annual income is $1,826.41, which is quite a big jump compared to this time last month. At the start of September, my annual dividend income was $1,766.71, which represents an income gain of nearly $60 just in the last month. And another really cool thing, you guys might have seen this because I made a video on it, I'm now averaging over $150 of dividend income every single month. And this income is starting to get to a point, guys, where at least to me, this is becoming a pretty substantial amount of income. It's getting unreal. And if we break that down on a daily basis, every single day, officially, guys, I am making $5 of passive dividend income all 365 days out of the year. That basically is like free Starbucks every day for life, guys. That's crazy. However, guys, looking at this, I am reminded once again that the portfolio still did see quite a big loss in the last month. And if we go over here to Seeking Alpha, we'll take a look at my best and worst performing stocks for the month. And if we scroll down and take a look at this column, we're gonna see a lot more red, guys, than we do green, right? I mean, throughout my entire portfolio, I only had 3 stocks that saw any gain in the last month: AbbVie, Starbucks, and Johnson & Johnson. But reorganizing this and showing my worst performance at the top, guys, it's like, those losses are pretty crazy. Down 22% with ORCC, down 21% with Main Street Capital Corporation, 20% with WP Carey, near 20% with Intel. Realty Income saw a big loss. KRC, AT&T, Chevron, the list goes on and on. And my stock with the lowest share price decline in the last month was Lowe's down here, who saw a loss of basically 5.3%, which still in a month's time is a very substantial drop in share price. And during a time like this, when I'm really starting to feel the downward pressure of the market, I think about the investors that I look up to, the Warren Buffetts, the Benjamin Grahams, the Charlie Mungers, and I think how they would handle being in this situation. And I'm reminded of a quote by Benjamin Graham that does bring me some comfort and solace during this volatile time. Ben Graham said, "The intelligent investor should recognize that market panics can create great prices for good companies and good prices for great companies." And in my portfolio in the last month, I like to think that I picked up a little of both, some good companies and some great companies. And as you guys can see, as far as my purchases go in September, I bought some Intel. I invested about $90 into Intel throughout the entire month and picked up 3 shares of that. Next, I invested a whopping $284.58 into KRC, Kilroy Realty Corporation, which is the newest position in my portfolio. I bought 6 shares of that as I'm really trying to build up that position. I invested about $240 into Lowe's, which is a great company at a pretty good price, I think. I bought 1.25 shares of Lowe's, and I also started contributing to Procter & Gamble again, which admittedly is not at the biggest discount, but this is a stock that I'm now officially in the red on, and I wanted to start building up my position a little bit more and lower my average cost per share. So I invested $120 into Procter & Gamble and got almost 1 whole share of that. And last but not least, guys, as per usual, I invested $200, $50 per week into the Roth IRA, which brings my total purchases for the month of September to $934.37. And on that note, guys, taking a quick look at the Roth IRA, which I have called Margarita Money. I figured it's a pretty fitting name for me. You guys know how I like my margaritas. But guys, all time in this Roth IRA, I am down nearly 24%. And in the last month, I saw a loss of about 8.8%. So a bigger drop in the Roth IRA IRA than in my dividend portfolio, which is okay. I've got decades and decades until I can realistically use these funds, so I'm really not stressing about it too much. And like I said earlier, guys, when it seems like there's just a sea of red, nothing but red out there in the market, this can be good for us dividend investors because we can pick up shares of our favorite companies and our favorite ETFs at a cheaper price than we otherwise would be able to, which is great. It's the same amount of income, we're just able to pay less for it. Now, switching gears and getting into my watch list, guys, I did add a new stock to this watch list. I added this company right here, PKG, Packaging Corporation of America, which is a company in the materials sector that manufactures containerboard products that are used for shipping, various types of packaging, retail displays, and more. Essentially, guys, it's a very boring company that makes extremely dull products that no one really cares too much about, but are in demand and will continue to be as we move into the future. And there's a few reasons why I added this stock to my watch list, which, by the way, was a recommendation from my friend Joel Batista. So Joel, thank you so much for that. But starting here, guys, with the share price performance, year to date, PKG is down 16.2%. And in the last month, they've seen a pretty big drop, near 18% just in the last 30 days. And taking a look at the valuation, as I'm sure you can imagine, this brought the PE ratio down a little bit, down into the single digits, just below 10 right now, which is right in line with the sector median, just a little bit below the sector median, but this is nearly 40% lower than this company's 5-year average. So compared to where this company usually sits on a historical basis, PKG is looking to be more discounted. Now, talking about the dividend stats real quick, guys, I mean, Seeking Alpha is giving them glowing reviews, really solid grades. And taking a look at all of the stats down here, they have a forward dividend yield that's pretty high, 4.38%, with a very low payout ratio, 37.28%, and a nice 5-year growth rate, 12.3%, with 11 consecutive years of dividend growth right here. So there's a lot to love about PKG's dividend. You've got the high yield, you've got the high growth, you've got the low payout ratio. A lot of things to suggest that this could be a good potential addition to my portfolio. So I'm gonna do a little bit more research into it. Now, throughout the month of October, there's a few things I'd like to do in this portfolio. Number one, I'm definitely gonna continue adding to my KRC position. As you guys can see, I have 12 shares of KRC, so I have about $500 invested into this company. I'd like to get that to at least a $1,000 position before I consider switching gears and investing into other things. But additionally, like I mentioned, I'm officially down on Procter & Gamble. Right now, guys, I'm down over 6% with this position. So I'm gonna continue buying Procter & Gamble. Like I said, it's not at the biggest discount, but I am at a loss on it, so I don't mind averaging down right now because I'd love for Procter & Gamble to be in the top 5 biggest positions in my portfolio, one of my core. And in addition to those two stocks, I'll probably throw a little bit more money into other stocks like Altria Group. I'll probably buy some more Lowe's, some Snap-on, all positions that I'm currently down on and I think make for great buys right now in the month of October. And having said that, guys, check out this next video to learn about a few other stocks that are just looking prime for purchase right now. All of these stocks are ones that you should have on your radar as we make our way through October. So click right over here and I'll see you in the next one.